This is day 11 of my series of becoming a profitable trader as a 17-year-old, and in today's video I'm going to be going over two trades that I took on gold, one that I took on Monday as well as one that I took yesterday. Let's get right on into it. So these are the two trades that I took over the past 2 days. Let's go over the trade that I took on Monday 13th. So I'm on the 15-minute chart, and at 11 a.m. EST, price created this liquidity void, and then what did it do after? It started consolidating. And when price is consolidating, what does that mean? It's accumulating orders. So what do I expect based off of ICT's power of 3 after accumulation? Manipulation. And that's what price did at 3:45. It manipulated all the way till 4:45. So I expected price to distribute right after 4:45, which is the ICT power of 3. And if we move down to the 5-minute chart, scale down to the 5-minute chart. Oops. Where's it at? Right there. Price created a liquidity void at 6 p.m. and let's draw that out with the rectangle from this low to this high. And obviously, price tapped into this liquidity void. The entry is a little bit high because of spread. Excuse me. And then price started consolidating right as I entered. And thankfully, my stop loss wasn't too tight. If I placed my stop loss down here, I would have gotten stopped out. So obviously, how this trade played out, it wasn't an optimal entry for the trade. It would have been better if I entered somewhere over here on like a 15-minute fair value gap or something. 15-minute fair value gap, like right here on this candle at 9:30. That would have been better, but oh well, you can't complain because the trade just played out either way. So I still got to be careful on how I execute trades. This is not it. Over here, and thankfully I placed my stop loss down at this swing low at 115, and then price ended up hitting my take profit up here for the mean threshold of this liquidity void. So it'd be roughly around here, and also at this swing low, which is also a breaker block. And the trade was a 1-to-1 RR ratio, and it played out the way that I wanted it to, which is good. Next trade, the trade that I took yesterday, and I was hunting this trade all day during school. You guys don't understand. Like, I was in English class, I was in world class, AP world class, just on my phone, on my computer, on my Chromebook, and I was like, hey, I know this trade's gonna play out the way that I want it to. So I was being very patient. I didn't rush through any trades. I knew that it was gonna do what it was gonna do because ICT concept. You always gotta believe in ICT concept, right? And this is the same thing. ICT power of 3: accumulation, manipulation, distribution. It doesn't get any more textbook than that, right? So after let me remove these lines. After news, I think it was PPI on Tuesday yesterday. PPI price started to consolidate in an upwards trend, and then after this candle at 10 a.m. price started to consolidate and accumulate orders in a downtrend. And what do I expect price to do? At 11:35, price started to distribute down, go for these swing lows, and then distribute. So what do I wait for? A fair value gap to form. How cool is that, huh? Fair value gap to form right there. Price trades into it, dips into it, fills it in. No, it doesn't fill it in, but it trades into it and it goes higher. Where did I target for? The high of this consolidation, excuse me. That's what price did. Oh, I didn't hit it like that. But that was my projected target. If I included the spread, that would hit my take profit. Exited the order actually down here. And my take partials down like right here, the high of this candle at 10:05. So that was a trade. I think I'm up like 3% on my account right now, which is nice. This was a 3-to-1 RR ratio, and I hope you guys learned something from this. Thank you guys for watching, and I'll see you guys in the next one.